Hello, and welcome to Financially Fit, a series of podcasts on what it means to be financially healthy and what it takes to get there. In each video, we speak to an expert on one of the 4 steps toward financial health, according to the Financial Health Network: spending, saving, borrowing, and planning. Today's topic is saving, and our guest is Antonio Olivero from Student Financial Services at LaGuardia Community College. Antonio has a great perspective on this topic. His career journey has taken him from banks to private lenders to the world of higher education finance. And he's also a first-generation college graduate with degrees from Queensborough Community College and St. John's University, where he received his BA in business. I know Antonio is a fountain of financial wisdom because I've already taken some of his advice and started putting aside a little bit more money. Hi, Antonio. Welcome to Financially Fit.
Hi, Marion. Thanks for having me to share some of our Smart Money Financial Literacy workshop information. We encourage students to view our Smart Money videos that cover banking, budgeting, credit, and student loan repayment. Student Financial Services is glad to help our LaGuardia Community College students.
And thanks so much for joining us. You must be very busy. In your office, you're responsible for moving millions of dollars worth of student loans that come through LaGuardia. Do you often get a chance to sit down and talk with students about their finances?
Absolutely. And that's the favorite part of my job at LaGuardia, counseling students and running workshops to help them manage their money.
Is saving money a frequent topic of conversation? As a former banker and loan manager, I'm sure you are promoting saving as a good thing to do with your money.
Yes, I do. But it's getting tougher to save now. A lot of people are living month to month or from paycheck to paycheck.
COVID-19 has hit Americans very hard. It's really hard to think about saving when you or someone in your family may be losing a job or facing cuts in income. But even before the crisis, people were facing serious financial challenges. I want to start by touching upon a point of concern from one of your earlier workshops, Antonio. The fact that many households in America are unbanked or underbanked. Can you explain to us what that means?
Sure, Marion. According to an FDIC 2015 study, about 7% or 9 million American households are unbanked. This means 7% do not have a bank account or have no access to financial services. An additional 20% or 24.5 million households are underbanked. Underbanked means we are not fully utilizing the financial system.
And how does that play out for students and families?
People without bank accounts tend to use more expensive prepaid cards, money orders, or check cashing services. These services have costly transaction fees and lack convenient features. Let me give you an example. I'm Puerto Rican, the son of migrant parents. My mother used to stand in line to pay her Con Ed bill using a money order. Imagine standing in line to pay a bill with little kids in tow.
And she first had to stand in line at the post office or bank to buy that money order to pay the bill, right? And pay the fees.
You may pay a set fee of $5 or $10. In some cases, you may pay a percentage of your paycheck. Can you imagine paying those fees just to cash a check? But that's the reality for many folks like my parents. The banking system was like a maze for them. That's what it's like to be underbanked or unbanked.
Saving money on fees, that sounds like a great reason to open a bank account, right? Or do banks also charge those fees?
Glad you asked, Marion. One reason why people don't open bank accounts is being cautious due to a lack of familiarity with fees, rates, and the benefits of checking and savings accounts. What I would stress when advising a student who's new to all this is to learn the basic blocking and tackling moves. That is, to understand the banking system. We'll talk about fees in a moment, but first, the number one reason to put your money in a bank account. Your money is safe. And in case anything happens to the bank, your money is protected by the Federal Deposit Insurance Corporation, or the FDIC. Second, if you are paying for check cashing, or money orders, you may end up saving money on your financial transactions. Third, try to set up a bank account with either no monthly fee or a very low monthly fee.
I like the kind with no fees. Are those accounts hard to come by?
They are available for those of us who do our homework. Here are 4 ways to open up a bank account with either no monthly fee or low monthly fees. Number 1, open an account with a minimum balance requirement. So in that example, let's say you open up an account and you maintain a minimum balance in your bank account of $1,000. That could give you a bank account with no monthly fees. Number 2, open an account with a minimum debit card transaction requirement. So sometimes banks will provide no fee bank accounts if you utilize your debit card, for example, 5 or 7 times within a given month. If you open a bank account with direct deposit, that's a third way that you may be able to open up a bank account with either no monthly fees or low monthly fees. And the fourth is to open up a student bank account. In many cases, they offer no monthly fees or low monthly fees.
Really? I wonder why banks would offer their services for free.
Working as a bank branch manager, I've sat on the other side of that bank desk, so I know how financial institutions think. If someone signs up with direct deposit, it says 2 things to the bank. Number 1, that the customer is working. Number 2, the customer is more likely to keep the bank account open longer. Banks have found statistically that people who set up a bank account with direct deposit are less likely to switch banks. Why? Because it's cumbersome. You have to go to your HR department, fill out a form, submit a voided check, and wait a pay period. Banks find that people who set up direct deposit keep that bank account for much longer periods of time and become loyal customers. And that is what banks value.
I'm thinking of opening a savings account again and using some of your advice.
You and our students should shop around because different banks have different minimum balance requirements. Also, you should look at how to open a bank account for no fees or low fees.
What other strategies do you recommend to students who are shopping around for a bank?
Use your 2 legs and just go around your local neighborhood or around where you work within a 1 or 2 mile radius. Why? Because even though we do a lot of electronic banking or online banking, every once in a while we may need to go to the branch. You want to make it relatively convenient and shop around when you go to the bank. I like to say a banking relationship is not a one-way conversation. It's a 2-way conversation. You're interviewing them as much as they're interviewing you for that bank account and bank relationship.
Saving is so hard. How can we get into the habit of saving?
The first thing you need to do is establish a budget. I have a very simple Excel worksheet that I share in our Smart Money financial literacy workshops. You can also use software tools like Mint.com. There are many others.
Budgets take a lot of time. Do they really help? And if so, how?
You need to see your budget. I'm a visual person, so by putting your expenses and your income on a piece of paper or a spreadsheet or utilizing some type of software tool, you get to see your budget. And you also need to live your budget. You need to say, oh my goodness, I get paid on the 1st and the 15th of the month. So okay, then associate your expenses to your pay periods. It's what I call a time-based budget. Associating bills or expenses with when you get paid helps you pay your bills on time. And when you look at that spreadsheet, you can start to attack your budget.
And what does that mean, attack your budget?
When you list your monthly expenses, you can see where you may be able to make some changes. That is, cutting or reducing expenses.
Oh, I see where this is going.
Exactly. So as an example, I brought my monthly cable phone and TV bill down from $225 per month to $119 per month. That's a lot of money. How did I do that? I cut the phone and TV cord and moved to one of these online TV services. I kept the internet connection and actually went from 150 internet speed to 1,000 internet speed. So I actually increased my internet speed. And I use now my cell phone as my all-purpose phone.
Cutting the cord seems like an obvious thing to do if you don't need all those cable and TV services. If you shop around to services like Hulu and Sling, you can cut some of those expenses.
Another way to save is to cut spending on a daily basis. If you are buying every morning a cup of coffee and an egg sandwich, that adds up. It will cost you $5 a day at $25 a week, $100 a month, and $1,200 a year. If you bring your coffee and have breakfast at home, that could help you save up to $1,200 a year in savings, and over 40 years, that's $48,000 in savings. I got a new coffee mug, the Yeti. It's as big as anything. And I bring my lunch, saving an additional $10 a day. Bring your lunch, it adds up.
I think I need one of those mugs too. I want to sock away some coffee money. Which brings me to your big piece of advice to students about saving, building up a cash cushion. What does that mean, and how does that affect one's financial health?
A cash cushion is a chunk of savings available for emergencies or a change in circumstances like losing a job. Try to have enough money to cover at least 2 months of living expenses. Some financial experts like Dave Ramsey recommend you have 6 months of expenses saved up.
Building up savings like that is not instantaneous. What can folks do if they're having trouble saving at the moment?
Apps can help. I'm not recommending any particular one, but Mint.com can help you figure out what you can save based on your monthly expenses. And if you set up an auto debit from your paycheck into a savings account, this can help you save automatically. To keep it simple, just create a budget and add savings as a budget item.
Auto saving deduction really takes some of the stress out of saving. If you don't have to think about it, if it's being debited automatically. Any other advice?
Do what works for you. There isn't one right way to save or one strategy for everyone. Shop around for banking services. Find a bank where you feel welcome and develop a banking relationship. Make sure you're either paying no fees or low fees for that bank account. Ask questions. Be an educated consumer. Most importantly, look at your budget. Live your budget and set realistic savings goals.
Antonio, it's been such a pleasure speaking with you today. I've really enjoyed learning about what you do with your own finances. It's great that you developed a philosophy that can not only apply to your own situation, but to anyone else. And by the way, if people want to know more and check out the financial literacy workshops you mentioned earlier, where can they go?
Glad you asked. I hope a lot of your students will be able to check out our Smart Money financial literacy videos. We normally do these Smart Money workshops on campus, but because of the coronavirus, we have converted them over to online videos so students can access them. There are 4 videos in this series. The first one is on budgeting, the second is on banking, the third is on credit, and the last one is on student loan repayment.
If you or someone you know at LaGuardia is experiencing financial stress, please reach out. LaGuardia Cares has lots of resources to help. You can email them or call to find out their hours and services, or just pick up the phone and call 718-482-5129.
Marian, LaGuardia Cares does a fantastic job for our students. They help with applying for public benefits, legal services, individual financial counseling. They also offer a food pantry and many other services. LaGuardia Cares is a great resource for our students.
Antonio, thank you so much for that information. And for all of you out there continuing your financial health quest, I hope you'll check out our other videos in this series, Financially Fit. You'll find all the links down here in the description. Thanks for joining us and stay safe and healthy out there.